Hi there, welcome to Kneppy Invest and welcome to the 25th of July 2025, the final trading day of the week, but not the month because we have next week to go. Okay, time is currently 1:58 p.m, so about 2 hours and 10 minutes left of trading today. So why am I recording this video a little bit earlier than I usually do? I just finished recording another banked video, a bit of a reaction to this article on Live Wires. 4 small caps we're watching this reporting season. This is going to be interesting because I've recorded this video on the 25th of July. You'll be able to see how these companies have performed in August. And then I'll release this video sometime in September either September or October, or we'd not be releasing this video twice. Anyway, so I have not really told you why I'm recording this video a little bit earlier than I usually do. And the main reason behind it is I went for a long, well, actually it wasn't, yeah, sort of was a long hike. It was a 3-hour, 30-minute hike. I climbed up a mountain 3 times. So North Brother Mountain near Laurelton. In fact, I took this photo near the top of the mountain. So I went from sea level to the top of the mountain, not quite to the top a couple of times, but I think it's about 500 meters, the height. A really nice lookout, by the way. You can just see the lookout. So really nice lookout. Not my favorite path up because it is a national park. And a lot of times when you're going up a large distance, so elevation, you have a lot of switchbacks. No switchbacks at all, but a lot of steps. In fact, 690 steps. I'm not the biggest fan of climbing up steps because they tend to be quite fatiguing on your legs, but I just wanted to see how my legs handle it. At this point in time, handling it fine, which makes me feel fairly confident that I'll be able to do a lot of hikes on my trip. The only time I do like steps is actually when you're going down and your shoe is not quite as long as it should be, because if you're going down, your foot tends to slide into the end of the shoe. So what I'm going to do is next time I buy some hiking shoes, I'm going to buy some hiking shoes when I arrive in the United States. I'm going to buy my hiking shoes 1/2 length more than what I would usually buy, just so that thing doesn't happen. In fact, there is a term for it. When you're banging your toe against the end of your shoe. And that did happen to me a few times, but overall my toes are fine. So, and the other reason why I did this hike was just to test out my new hiking shoes. I bought some hiking shoes. So that's the one little thing maybe that I would change if I bought these shoes just a little bit longer. And that's another reason why I'm doing these hikes. It's just a test, just to see what I need to do differently. Like last time I did a hike, last Saturday, I forgot to take water with me. I took water with me this time. And in fact, last time I only went up this mountain twice. Now it's 3 times. So maybe next time I'll do it 4 times. But I don't like this hike just because too many steps. Anyway, so that is, and the whole reason, that doesn't really explain why I'm recording this video earlier, but I did come home about midday and then I had a look at the market. And then I thought, why not just record the video after I've done all that? And then I recorded this standalone video, or this article reaction video, and that took 30 minutes. So yeah, 30-minute reaction to that article. Okay, so let's have a look at the ASX today. I did not even have a look at how the Wall Street performed overnight. I just woke up, got ready. It's a 30-minute drive to this mountain. And that's all I was thinking about when I woke up. I didn't really think about looking at Wall Street. And I had no idea which way our market would go. And the really good thing about today, unlike yesterday where there was a plethora of possible stocks of the day, today, because I circle the companies I think whose share price will move, I only circled 5 companies. So those are the 5 companies in the stocks of the day. Anyway, so the agenda of today's video, we'll go through the ASX today, have a look at the best and worst performing sectors, indices, companies. Then we'll turn our attention to the top 5 stocks of the day. Some really good performing companies in there, including some few surprises and possibly a bit of a turnaround for one of these companies, a company I've owned in the past. In fact, I was intending to own this company for the long term. Then I sold out because a bit of infighting in the board, that sort of thing. Share price or the chart looked pretty bad, and then I just sold out. Possibly starting to look, or maybe I should look again at this company. And chart of the day has to be Droneshield. Well, it doesn't have to be, but I've decided it will be that. Okay, and will I have a look at any of your comments? I have no idea. Maybe. Ben Hutchinson says RLF AgTech has a worse website. That does make a difference. I have to agree with Ben. I do like looking at companies' website. And if a company has a really bad website, that is a massive turnoff. So I have to agree with Ben Hutchinson there. Yeah, maybe I should mention this comment at the end of the video. Let's do that again. Okay, let's have a look at the ASX today. So Wall Street, I did have a look at Wall Street when I got back home. Nasdaq was up. Yeah, Nasdaq was up 0.25%. Dow Jones down 0.7%. So not surprised we've had a negative day, unlike yesterday where I was surprised. And a pretty good day for tech, which is understandable. Nasdaq was up, so a good day for tech. And resources down, so I'm assuming iron ore might be down. Gold might be down. In fact, I didn't have a look at any commodities either. Okay, so let's have a look at the best and worst performing sectors. And in fact, we're starting to see XGO and XAO, excuse me, starting to increase or rise since about midday. Yeah, when the brokers go on lunch. It's always midday. Brokers go on lunch, and then things start to turn around. Coincidence? I think not. Sectors, pretty good day for energy. So, oh, uranium. I did have a look at uranium. Uranium was up. And the whole reason I look at uranium is because I'm trading Paladin, and I was, yeah, it's up 3.1%. There you go. So that could be a reason why. What about oil? Oil might have had a good day. And coal, oh, I did see one company up a lot, and that was Coronado. So let's just have a look at energy. So uranium, maybe a bit of coal. Best performing companies here by market cap. Woodside up a fair bit as well. In fact, a lot of red here. So it's really Woodside which has driven energy up today. I'm not sure why Woodside is up, but there you go. And in fact, some coal companies are down and uranium companies are down. Why are they down when uranium's up? It does not make sense. Okay, telecommunications up, so that'd probably be Telstra, and a pretty bad day for financials and particularly materials. So another bad day for the banks, which is understandable because, again, highly overvalued. And indices, only tech is up. Everything else is down. And gold is down 1.95%. There you go. Okay, now let's have a look at the ASX 20, down 0.32%. So we already know Woodside's up, probably Telstra's up, a few defensive companies are probably up, maybe CSL's up, WiseTech might be up, Pro Medicus might be up, Aristocrat might be up. I'm going to say the three iron ore companies are down, the banks are down. So let's see how right or wrong I am. I am assuming 10 companies up, 10 down. Oh, 7 up, 13 down. I was completely wrong there. And those companies up, let's have a look. Woodside, we already knew that. Pro Medicus, Telstra, Transurban, Defensive, CSL, Woolworths, and Wesfarmers. And those down today, Fortescue, BHP, Rio Tinto. There you go. The iron ore companies have had a pretty good run, and that good run has come to an end, it looks like. Okay, any interesting latest on market index? Buy, hold, sell, 6 stocks with above market yields and 2 from the managers. I don't care about above market yields. That means nothing to me. It's not something I will look for in an investment for the long term anyway. Okay, now on to the top gainers. Okay, so the company I will talk about in a little bit more detail is Albion Resources. In fact, it is the best performer of the day. It's a fairly small company, and I don't think I've ever heard of this company before. Markup is now 17 million and pretty big turnover. Intelligent Monitoring Systems or Monitoring Group is in my top 5 stocks. In fact, it is the stock of the day. And there's Coronado Global, up 26.92%. I did point this out the other day. Forget which day it was. In fact, this was my chart of the day yesterday. There you go, up 26.92%. I thought their little result or update was actually quite good, but the share price actually didn't respond all that much on the day. It was up a little bit, I think. Or was it down? I can't remember. Up a little bit, and I thought it would be up a way more. So it seems like there might be a bit of a delayed reaction. In fact, if we saw the share price rise like this yesterday, this would have been in my top 5. Would have been my top 5 instead of probably Calix, maybe. There you go. And that means the chart might be looking pretty good. Oh, I shouldn't be talking about Coronado because, yeah, the chart does look better now. Okay, let's go back to top gainers. Sorry, I went on a bit of a tangent there. Ambertech, fairly small company, but share price is up 26.7% on a trading update, and that is in my top 5, even though it's fairly small. And I don't think there's anything else here. Tana did release their pennies 4C, but it wasn't good enough. Still, I suppose you could say they're close to being operating cash flow positive, but there's just a little bit too much interest in the company for my liking right now. They need to prove it a little bit more to me. And Laserbond up, share price up 14.74%, and that is also in my top 5 stocks of the day. In fact, number 1, number 2, number 3 are Intelligent Monitoring Group, Ambertech, and Laserbond. 3 fairly small companies. Top gainers by market cap. There was, Go Botanics. Go Doug. KMD brands. There's nothing else I really want to discuss here, although I am interested in Doug and Botanics. But let's go back to Albion. What's it called? Albion Minerals or something? Albion Resources. Share price up 81.16% on a drilling result or something like that. 11 meters at 20 grams per ton. Gold from 17 meters at Yandell West. That name, Yandell West, is familiar. I don't know where I've heard Yandell West before. I doubt it's from this company. But anyway, that's an interesting hit. I completely missed this announcement when I went through it fairly quickly a couple of hours ago. But yeah, 11 meters at 20 grams per ton. Now, if this was like 100 meters at 20 grams per ton, this would be, share price would be up 10,000%. So yeah, it's all relative. But 11 meters at 20 grams per ton, that does sound pretty good. And it seems like it's fairly shallow as well, 17 meters. So yeah, near surface, I suppose that's a good way to look at it. Near surface. So 11 meters at 20 grams per ton. But they do go below that, 12 meters at 1.3, 5 meters at 38.9. So some of these drill results were not that good, but there is that one really good hit. Now, if they had 3 really good hits here, that would be quite significant. Historical hit of 3 meters at 15 grams per ton remains open at depth. Albion has completed follow-up drilling with assays pending. I sort of can understand why the share price is up for Albion based off these results. It seems or looks really good. And let's just have a look at the chart. Is that the right ticker code? It is. And there it is. I can't read. Interesting chart. Look at that volume. Look at that massive. No interest in this company before today at all. Well, maybe that's relative because the volume today is 30 million. There was a day not long ago, back in March, where the volume was about 4 million. You actually see it right there. And that was sort of the turnaround. You can see the massive spike in volume at the low. And that was the end of the downtrend, looks like. And sentiment started to shift. Share price actually moved into a bit of an uptrend. And today, share price has just popped up significantly. In fact, it's above 10%. Not 10%, 10 cents. So pretty good day for Albion Resources, but not for me. Okay, now on to the losers. Not much here. You can see the top loser of the day is on a turnover of $713. That's nothing. And even the ones below that, look at the turnover, all less than $100,000. So I won't look at these sort of companies with that sort of turnover. Really small companies, there's no point looking at these. Another company with turnover of $638. I'm looking for pretty big turnover. But even when you go to like native mineral resource holdings, share price is only down 12.5%. That could be just a bit of a noise. I'm looking for really big turnover, and there's nothing here. In fact, if you keep going down, the turnover is really slim. So nothing much here. And there's my Traveland, my Traveler's Diarrhea company, Imiron, down 10%. I shouldn't say my because I don't own any shares in the company. I've never owned any shares in the company. It's just like what they do. Okay, list of worst performers by market cap. Droneshield, share price down 9%. Share price down yesterday, and they released some good news. Electro-Optic Systems, I think these two companies sort of going up and down in tandem. MetalsX is actually the company I want to talk about. They did release something today, and there was nothing else I really could find, I'll be honest with you. So MetalsX is it by default. Favorite word in the English dictionary, default. Who said that? That was in a TV show or something. Favorite word in the English default. One by default. That was definitely in a TV show. Who said one by default? I'm not going to Google it on this screen. Who said... I think it might have been Homer Simpson. I have a feeling Homer Simpson said it in a Simpson episode. One by default word. Favorite word. Let's see. Default, the two sweetest words in the English language. There you go. I can't tell you what episode, but I did watch Simpsons a lot when I was much younger, and some of the episodes are still in my mind. Okay. So let's have a look at Metals X, share price down 6.11%. And again, I couldn't find anything else to talk about. So Metals X did release a bit of operation update. Quarterly activity report today. Yep, that was today. I am not lying. I didn't not have a look at this. This is tin. Is it tin? I think it's tin. I think it is tin. Yep. Renison achieved a total tin production of 2,724 tons of tin in concentrate for the quarter. Most important thing about this is whether these numbers or these numbers hit or miss expectations. I'm assuming maybe it was a little bit of a disappointment to the market. Closing cash decreased. That could be a little bit of a negative sign if decreased. But again, we don't know any sort of working capital changes. The other thing is there was a company the other day who mentioned they didn't receive many receipts. So if you just look at the cash receipts, that was really negative, but they didn't sell any gold. They just are leaving the gold on the side to sell for later. So sometimes you do have to dig a little bit deeper just to see why, in this case, Metals X cash is down. Anyway, so there's a lot of information here and I haven't really read it. Generate a net imputed cash inflow from operating activities of 29.97 million. Driven by third highest quarterly metal production on record and lower cash production costs. It sounds pretty positive. So it all sounds okay. You have to dig a little bit deeper to see what might be negative in here. But let's have a look at the chart for Metals X. It could be just noise, by the way. It could be just noise. I don't think tin's doing much right now. We can have a look at tin. In fact, it's right here. Tin's not tin. It's not the worst looking chart, but it's not the greatest chart either. And Metals X, yeah, its share price did rally a fair bit a few weeks ago, and now it's maybe just a bit of a pullback. Anyway, so that's it. Metals X chart doesn't look that bad either. Okay, now on to the top 5 stocks of the day, and we'll start off with Mastermyne. Yeah, Mastermyne. Mastermyne share price down 3.13%. Earnings update. Sometimes that's all it takes to get into the top 5 stocks. You release earnings update. Share price was down more than this. It was down about 10% on open or near open. So the low was 14.5 cents. I'm not surprised the share price has risen back up. Now, I'm not sure how, only 26 trades. So and the reason I'm not surprised the share price fell, and then I'm not surprised the share price has rallied, is because short term, yeah, the numbers look pretty bad, but just based on the commentary and with the market being forward looking, I don't see why you'd be selling out right now with Mastermyne, because things should be turning around quite nicely in the next or this current half year. The reason I say that is if you look at the numbers, it looks crap. Revenue down significantly from 294 million to 214 million or so. They also mentioned EBITDA down from 27.5 million to about $12 million. So it just sounds horrible. Everything's just dropping. There is reasons behind that, and they'd go into the reasons here, predominantly due to suspension of production activities at Grosvenor Mine, closure of Integra Mine, activities of the Moranbah North Mine being restricted, example, etc., etc. Now, this company is a mining services company. I'm pretty sure mostly to coal, and I'm not sure if they do drilling. Not sure they do drilling. They don't say it here, but that's what I'm thinking, if I remember correctly. But the market is forward-looking. And the market should be looking at what they mentioned further down. So even though the numbers look pretty bad, subsequent to year end, longwall consolidation activities and other activities have recommenced at Moranbah North Mine. In addition, the company's new Appendix project ramped up during June 2025. So so things look like they're starting to turn around for this company. So I think there's a chance that things will be much better in this current half year than what we saw in the previous half year. And to be honest with you, this company's not that expensive. Market cap might be like 50 million, 47.84 million. So have a look at that, 47.84. Not sure the debt, there could be a fair bit of debt. But if you just have a look at the numbers for this announcement, EBITDA, what was it, 12 million? So trading on 4 times EBITDA, it's not that high. And if last year the EBITDA was 27.5 million, and it goes back up to that, we're talking about trading on less than 2 times EBITDA. So, and you could say that this company is quite cheap. Now let's have a look at the chart, and I will say that it does look possibly like it was in a bit of a downtrend, and it does look like maybe just in the short, maybe it's maybe found a bit of a consolidation period or consolidation zone. So going sideways, and nice volume today, and the share price has recovered. So I do think there's a bit of support below 15 cents. And I think the first sign of anything positive from the company, I think the share price will rip higher. If you have a look at the weekly chart, I wouldn't be surprised if this is a pretty crap chart. Yeah, it's a pretty crap chart. In fact, it's a horrible chart. I wouldn't say that's the upside, like $1.50, but that would be nice upside if everything goes right for this company. We're talking about a 10-bagger. So this might be like the bottom of the cycle. Plus, if they are in coal and coal starts to turn around, that could be fairly positive for this company for the long term. So maybe one company to put on your watch list, particularly if you're looking for value. Okay, coming in number 2, number 4, we have Gentrack. Share price down 3.95%. It was down 5 or 6% when I had a look earlier. Now, they did release a market update, but it was not marked price sensitive. So typically, if a company's announcement is not marked price sensitive, I usually miss it. But you can see the time this was released at 7:30 a.m. What I typically do is I go to ASX announcements. And what I do, the reason I do this is sometimes ComSec their platform can be a little bit schizophrenic. And sometimes it doesn't load all the announcements. I found that yesterday. Not all the announcements were loaded, and it really peeved me off. So what I do with ASX announcements is I go to have a look at the first price-sensitive announcement, and then I go to ComSec just to see if that's the first price-sensitive announcement. But the thing that really stood out to me when I looked at this was Gentrack released a market update just before ENX released an Appendix 5B. And I was thinking, that's interesting that a market update was not marked price-sensitive. Yet the share price was down 5%. So obviously the market did see this statement or this market update and went, no, this is sensitive. So let's have a look at what they mentioned, what they said. By the way, the share price was down even more. Share price was down 10%. Share price was down 10% at slow. So that is not non-price sensitive information. Something in this market update did spook the market, maybe temporarily with the share price rebounding. Okay, so interesting wording here from Gentrack management. They have been informed by an Australian customer that Gentrack is no longer part of a process aimed at replacing their current platform. Whilst the financial impact of this does not warrant disclosure, out of caution, we are providing this update to our investors. Hence why it was not marked price sensitive, because they believe the financial impact is going to be quite low. But the market doesn't like this sort of thing. The market sees this and where it goes, something's wrong, I've got to get out. A lot of participants in the market, a lot of investors are very risk averse, and they just see this and they just leave. They just, no, I can't handle this risk. This is more risk. I've got to get out. I've got to leave. We saw this with Telix. A little bit of a possibility, just a slight possibility, something might go wrong. And a lot of investors just get out. They don't want that risk. Anyway, they also mention here, we remain confident of delivering our medium-term guidance of growing revenue and more than 15% CAGR and 15 to 20% EBITDA margin after expensing or development cost. Now, this could be the first sign of something going wrong with the business. We just don't know. We just don't know, which is why, again, some of those more risk-averse investors probably just fleed, got out 10% lower, that sort of thing. I had been trading this for the longest time. I did get out a while ago, and the share price or the chart of Gentrack is no longer in an uptrend, and it's not even in a downtrend. It's going sideways now. So for me, this was just get out, take profits, find something else. I can definitely see why the share price, when it fell to about $9, there was a bit of buying. There is a bit of support around that level. So just put a line there, nice support at that level, and the share price has rebounded okay today. And the volume hasn't been that good, but an interesting non-price sensitive announcement that I did catch. Happens rarely. Now to 3 positive bits of news flow. First one is Laserbond, share price up 15.8%. Oh, I just received the Call from AusBiz podcast. There you go. It's like an hour and 24 minutes after it aired. Okay, up 15.79% on Laserbond unaudited second half 2025 results. Share price at the high was up. So yeah, the share price was up about 20% at the high. This was one where I saw and I went, ooh, this could be really good. This could be good, could be bad. And straight away I went, this is good. And the reason I said this is good is because the first highlight section, they mentioned net profit before tax, prefer it was after tax, of 3.7 million exceeds top end of guidance. I understand why they probably put net profit before tax, because tax can be misleading. So maybe sometimes you have a higher tax than other years, and that can sort of throw your numbers out of whack. Revenue of 23.2 million in line with guidance range. I would prefer revenue to be above guidance. That would be, I think, even better. But profit before tax exceeds top end of guidance. So that's really good. That's all I need to know. In fact, all this other commentary, don't care. It's just that they did better than expected when it comes to profit before tax. Group revenue also, look at that, nice increase. There was a little bit of a drop in the first half, and now it's back up. So that's another good sign for the company. Stronger than expected profitability achieved with revenue near the midpoint of the company's guidance range. So again, with revenue near the midpoint means that's sort of like a expected. If it was towards the top of the range, that would be actually a really good sign as well. It reflects a notable improvement in gross margin performance. So I always look at gross margins. That's a good sign as well. This was mainly driven by increased workforce productivity as recently onboarded skilled staff became fully integrated and effective after initial training and development. I don't know what to think about that. Are they going to see improved productivity moving forward? I doubt it. So this could be just a one-off. But additionally, cost optimization measures implemented early in the year began to deliver tangible benefits in the second half, supporting a return to stronger profitability. So I do prefer a company to grow their profit through growth of revenue, not through increased work productivity and cost optimization. I prefer growth through revenue growth. That's sustainable for the long run. But they have seen a bit of revenue growth. So I actually do like these results. And Wayne Hooper was happy. Well, pleased, very pleased. So let's have a little chart for Laserbond. Is it time to start thinking about Laserbond again? This definitely was, definitely, look at the share price just going. Yeah, I noticed this the other day. Share price had gone on a really good rally from 36 cents. So, loose lips. I've seen a little bit of selling today, but I would like a little bit bigger volume coming through, but I think downtrend has definitely come to an end. So I think the bad news has come to an end, and more than likely moving forward, good things for Laserbond. I'm not the biggest fan of the chart, particularly with the share price just going on a massive run in a fairly short period of time. I would have liked a longer consolidation period and then the share price breaking out to a new high, but we're talking about a 5-year high in the share price, which is actually okay. I just don't like how the share price has rallied a lot in a fairly short period of time. Coming in at number 2, we have a really small company called Ambertech. Share price up 33.33%, gone from 15 cents to 20 cents. Trading update. I would refer to this company as a pretty crappy, low margin, crappy company. And you'll see that in the chart, the long-term chart. Share price, or the chart, was looking fairly negative until maybe today. So revenue 54 million. So you can revenue 54 million in a half. Wow, this company has a lot of revenue, but not a lot of margins. So a lot of revenue, but fairly low profitability. But they're expecting financial year 25 revenue to be above $100 million. EBITDA margin to materially exceed the first half of 2.4%. So again, EBITDA margin fairly low. They also mention here DELES segment continues to experience increasing demand given defense spending tailwinds. I was trying to remember what this company does. All I remember about this company is they're fairly low margins. So you can see there's no about section. So they have live media systems, defense, law enforcement, emergency services, DELES. So I cut. Oh, that's right. Music instruments and specialist hi-fi equipment. That rings a bell. Yeah. So again, I think they have a lot of different hands in pies. So a lot of different areas they're in. In fact, what I might do is just have a look at their website, if they have a website. Audio visual distributor. That also rings a bell. Media systems, professional products, commercial installations, residential installations, home entertainment, specialist hi-fi, musical instruments, DELES. There you go. Leading distributor of audio visual solutions. Yeah, not much margins in those sort of companies, but looks like they had a marked improvement. So let's have a look at the chart for Ambertech, because the company did release some disappointing announcements. I don't know how long ago, or it must have been back in May 2024. Share price, yeah, it must have been then. Share price dove 25% on that day. Share price then moved into a well-defined downtrend. Maybe found a bit of a base over the last few months. Share price going sideways, and all of a sudden share price has popped up. We have seen a little bit of selling here today because share price got as high as 22 cents. And now the share price is at 20 cents. So a little bit of selling today, and volume has been nice as well. So very close to a breakout, if not a breakout. But I would like to see the share price sort of starting to go back up again. Don't want to see the share price drop any more from here. Okay, and stock of the day. I thought this was a sort of a no-brainer. This was a really interesting one for me. Intelligent Monitoring Group. I've not been the biggest fan of this company in the past, mostly because very acquisitive, very big increase in revenue, but they've had a massive amount of debt. They must have changed they must have refinanced or something. And I'll talk about that in a second. Share price up 27.84%. And they released their Appendix 4C. I saw it and I went, meh, whatever. They're going to have high revenue or high cash receipts, but be operating cash flow negative. We've seen this time and time again for this company. So I was not really thinking much about it. And then I went to this page and went, oh, hang on. $58 million in cash receipts, operating cash flow positive $17 million. Now, if you have a look at the year to date, this is the whole year, almost $200 million receipts, but their operating cash flow positive only $12.1 million. So in the other 9 months of the year, they had $137 million of receipts and were actually operating cash flow negative. Hence my skepticism about this company. And the main thing I noticed, they did decrease some of the costs, it looks like. 36.72. Some product manufacturing operating costs fell. If you have a look at the year to date and compare it to the quarter, staff costs may have risen a little bit, but the thing that dropped a lot was interest and other costs of finance paid. It went from 17.2 million for the year to date. So we're talking about 15.5 million for the first 9 months. down to 1.7 million for the last 3 months. So they must have refinanced, and that has made a massive difference, which is one of the reasons I wasn't a fan of this company. It was just so much debt, and you can just see interest, $17 million for the year, and that put a dent into the operating cash flow. So that was the thing that really intrigued me about this company. And I'll have a look at more closely at what they've done, because whatever they've done has worked wonders. And the company was free cash flow positive by, what's that, $12.6 million. Now, if they keep this up, wowzers. I think I've said that a lot, wowzers. The company, I think, has a market cap, 221 million, so it's not cheap. I should not have gotten rid of that. And now the next thing I always look at, so cash on hand almost doubled from 12.9 million, almost 13 million to 24 million, so almost doubled. And the other thing I always look at is debt. So total financing facilities, 85. So they still have a fair bit of debt, 85.5 million of debt. They also have $35 million in unused financing facilities. I have a feeling that has dropped a lot. They must have refinanced or something. I'm wondering if they've mentioned this somewhere here. Here we have consolidation of Mammoth Security. Mammoth Security consolidation must be something to do with that. If we go back to the April Appendix 4C, you can just see the marked difference in both of these quarterly reports. And yeah, so this quarterly report, $43 million in receipts, operating cash flow negative by $7 million, and interest in this quarter, that quarter, $10.573 million. So something happened. So it must have something to do with completion of debt refinancing and mission to AOR. So it seems like whatever management have done when it comes to the debt has worked wonders. And this company, I'm looking at this company completely different now, just because of that one little thing. One little thing when it comes to debt. And it looks like the market is thinking the same thing as well. Share price up 27.84%. Okay, let's have a look at the chart for Intelligent Monitoring Group. By the way, this company monitors houses. It's security, and they've been very acquisitive. In fact, when I first looked at this company many, many years ago, I hated this company. Hated it. It's like, no, not for me. But they have, I think, the management, I think they've done a pretty good job. Very acquisitive, and again, not all the time these acquisition models, IMB split has occurred. 22nd of June, do you want to adjust your drawing objects to match new? Oh, that's interesting. I've never seen this before. Yes, they did do a split. I thought they did a consolidation. You can see if you go back to 2021, 2022, share price dropped. It was horrible. I think that's when I first discovered this company, and I thought, is this company cheap? No, it wasn't. And then looks like whatever the management were doing, it's worked. There's a little bit more skepticism in the management back at the start of, or the end of 2024. You can see the share price dropped. And I didn't have any kind of thoughts about this company just because of the debt and the lack of cash flow. And that's all changed. Nice volume today. Share price has not quite broken out, very close to breaking out. This could be on my radar for a possible buy just because of the cash flow. I might want to wait for a little bit more confirmation in the next few quarters, but definitely a company I did not expect to be on my radar. Okay, chart of the day, Droneshield. Let's see, the share price is down even more, 6 or 7%, 9.2%. Droneshield. There's one reason why in the most recent rally, I just went, nah, not for me. In fact, the share price has gone way higher than the previous rally. But you can see the other rally, when I was trading Droneshield, I had to pay very close attention to it. And there was this 2-day period back on the 12th and 15th of July, 2024, when it gapped up. You can see the share price gapping up from one day to the next. That, a lot of times, that is a bad sign. That is a bad sign when you just see gaps up. And we saw gaps up a lot for this company. It's just telling me, maybe even telling the market, that there's a little bit too much enthusiasm. And eventually the share price will collapse. And then the share price just collapsed, down 22%. And that was the end. That was the end of the party for Droneshield, take number one. Share price moved into an uptrend back in March, not that long ago. And the share price just went up way too much. It just went up way too quickly. So eventually, when you see the share price go up way too quickly, you're going to see profit taking come in, and then the share price will start to drop. So even though the company did release something positive yesterday, share price still dropped. I saw an article about that. Droneshield share price drops even though they release something positive. The market doesn't care. A lot of those people who are trading this don't care. They probably didn't even know Droneshield released anything positive. Now, one positive thing you might take away from what's happening now with Droneshield is if you go back to when the share price dropped significantly in July last year, it was a massive volume, huge volume on the 2-day drop. And that was a really bad sign. But this little drop we've seen, it's on fairly low volume. So we have seen decreasing volume the last 5 or 6 trading days as the share price has gone down. That's actually a good sign that there's not as much enthusiasm selling. There's not as much rushing to the door to sell out your shares in Droneshield. Maybe even the 25-day moving average will act as support. So that's around or just below $3. That could be a support level for Droneshield. But I would have concerns about the valuation of this company. It still has a market cap of $3.13 billion. It hasn't quite shown the financials to match that valuation. So a lot of the rise in the valuation of this company is based off promise and potential. And they do have a lot of competitors. And I'm seeing a lot of different drone type companies, including these sort of companies, getting a lot of contracts and that sort of thing. So there's a lot of competition out there for these type of companies, and whether this company deserves a $3 billion market cap remains to be seen. And because it remains to be seen, I could see volatility remaining for this company moving forward. And that is all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.